Hit it.
It's Friday, January 29th, 2021, episode 116. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we are pleased to welcome to the show Brian Krogsgard from Ledger Status. Brian gives us no coiners, a terrific rundown of the crypto landscape. I think even those disbelievers of the bits in the sky will find this a wonderful interview. Then in Talking Charts, Patrick does his usual voodoo magic to tell us what the chart leaves are saying.
And this week in trading history, we go back to 1996 for the deal that never happened. And then we end with the segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way. So stick around. We got a great show. Lena, hop on. What beer are we drinking this week?
So today we're drinking Left Blonde Pale Ale. I'm pretty sure I've just butchered that pronunciation, but we'll go with that for now.
All right.
So this is another one, Lena, from our good pal, 50 Pips. Thank you very much. Now, he did ask that I don't be a Neanderthal and drink it out of the bottle. But 50 Pips, I did that last week for you. And you can take the boy out of Winnipeg, but you can't take the Winnipeg out of the boy.
So you're drinking out of the bottle.
I'm drinking out of the bottle. It's way too much work to drink it out of, get a glass down here and stuff. So,
all right.
Like
so here's something about this beer. Left Blonde is one of the world's best-loved Belgian pale ales, thanks to its fruity, spicy, seductively rich character. Brimming with fruity plum and raisin tones and crusty bread and honey malts, this gold-bodied Belgian ale breathes warm, seductive banana and clove yeast notes set in an elegantly carbonated golden body, offering unrivaled Belgian pale ale satisfaction.
This is the first time I've heard banana mentioned.
Really?
Seductive.
Yeah, we've never had a banana.
No less.
We've never had banana beer before. I like it, though. I like it. More bananas in our beer.
There you go. Kev, give us a disclaimer. Yeah.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much Huddle may include Gucheritis of the lumbar spine, chronic with a K, event delta hedging malaise, and then finally the blackberry blues. And that was a big shout out to Nathan for helping us with this week's side effects. Was he the only one that sent us side effects, Lena?
Oh, there's more coming.
There's more coming. Good, because we need some. But thanks, Nathan. We really appreciate it.
All right. Let's get to the interview.
Well, it's our pleasure to welcome to the show today Brian Krogsgard. Brian is the founder of ledgerstatus.com, and he's here to teach all of us non-coiners, everything we wanted to know about Bitcoin. Brian, thanks for joining us today.
Oh, Kevin, it's a real pleasure. I love the Market Huddle, listen to it every single weekend, so I'm thrilled to be on here.
Well, you're a real trooper for coming on. As you know, Patrick and I are no coiners, but at the same time, we are still people that with open mind, and I would love to kind of go through the whole logic of Bitcoin, and we can talk about how you go about buying it, why it's important for your portfolio. But before we do, why don't we just take a little step back and talk a little bit about yourself? I detect a great accent. Where are you from?
I'm from Alabama, born and raised. And an Auburn fan, for what it's worth, before we get our Alabama crew in here. So War Eagle to everybody.
I remember meeting someone from Alabama, and they told me that the real people from Alabama, they don't say the full Alabama, they just say Bama.
I teach their own, There's pockets of all types of people in Alabama.
Okay, so they were giving away where they were from in Alabama, obviously, by calling themselves Bama. Okay, so how did you why don't you walk us through kind of your journey to getting to this point where you're a Bitcoin expert?
Yeah, I'm learning every single day. So I've been deeply involved in paying attention to the markets every day type of involvement since really March or April 2017. However, my first acknowledgement of Bitcoin that I could publicly find was back in 2012 because I come from the web space, specifically software development using WordPress, which I've been doing full time since 2011. And I used to read Hacker News and stuff. I don't know if y'all know what that is. It's kind of like a message board for nerds. And back in the first Bitcoin bubble, those early ones, like 2011 through 2013,
yep.
Bitcoin was all over Hacker News, but I never thought of it as an investment thing. But I remember tweeting one day how I thought Justin Bieber starting a venture capital firm was even more annoying than Bitcoin being on the front page of Hacker
So that
News.
was your first public tweet on Bitcoin?
Yeah, and Bitcoin was $7, and it broke out from there, never came back. And if I would have just thrown $1,000 on there, I'd be retired today, right?
That's right. You'd be multi-millionaire. Have you ever done the math?
No, I don't want to.
Actually, the kid that I worked with, he was the one. He was very similar to you. He's an engineer just like you, and he told me about Bitcoin at $5. And I told him, he explained it all to me, and I told him it was the stupidest thing I've ever heard. And then he said, a month or two later, he says, that thing you told me was stupid at $5. Well, it's $50 now. And we went about trading it and doing all sorts of things, and we actually mined it and arbitraged it between different exchanges. And then it collapsed, and I thought, okay, great. I just rode the great bubble.
Yeah, game over.
Yeah, and thought to myself. And then, he kind of came to me, I can't remember how long later, and he said, all your complaints about Bitcoin, well, I think they solved them with this thing called Ethereum. And I said, what, I don't know. There's no way we're going to have two bubbles. This is not a chance. And he told me about it when Ethereum was a penny.
If
he had just gone, we figured it out. Like if he had just gone and put $1,000 or $10,000 into it, he would be like, never flying commercial again. It would be only private for him.
Yeah, I mean, it's one of those things. Most people that had a bunch of crypto back then, they either sold it, lost it, all kinds of things that could have gone wrong. Pizza. So let bygones be bygones. But
right.
Yeah, I never really considered Bitcoin from the investment perspective. I thought of it as, a weird internet currency. Even though I had familiarity with markets, I thought of markets as, you buy and sell Apple stock and stuff like that. I wasn't thinking of Bitcoin, the internet currency, as something that's going to make me rich. So that's really why I never even dove in to say like, well, how do I even buy this stuff? And that was all a lot harder back then anyway. So a lot of those narratives have evolved over time.
For sure. So it's changed a lot. And let's just talk a little bit about, you've gone and since then you've actually started a podcast. So can you tell us a little bit about the podcast, what it focuses on and who you do it with?
Yeah, so I've been into all things nerding out, audio and video for a long time. Do a podcast and stuff for my other business in the web space. And in 2017, Ethereum was on this incredible run up, and I was, cutting my teeth in trading crypto, like trying to get in and out of Bitcoin, Ethereum, and other things to try to increase the amount of overall Bitcoin I had while limiting my, need to like invest new dollars, like new fiat, right? And so I was trading and stuff, and I had some experience with trading from legacy markets and really dug into the TA side because all this stuff, it's so hard to value fundamentally that the technicals really were a big part of it. And still are. And my podcast co-host, Josh Olszewicz, is someone I followed and respected on Twitter, was learning some stuff from him that I had not always paid attention to. And in November 2017, almost at the top, I was like, hey, man, what if we start a podcast? I'll do all the stuff. You just show up with your brain and we'll talk about crypto. And he said yes. And off we went. And we've been doing that for several years now. And it's one of those things, the interest in the podcast almost followed the price of Bitcoin directly. So it started and it's like at the top of the tech and business charts in Apple. And then it just kind of fades away while people forget about it. And then, last year, everything started turning around again. And now it's like doubling in audience. It's crazy.
Yeah, no, it is not. So why don't you walk me through when someone comes to you and says, hey, I don't know anything about Bitcoin. Should I invest and why should I invest? Why don't you kind of walk me through what you tell those sorts of people?
Yeah, most of the time, and I get these, of course, when it's like, I'm usually saying this is a better time to be cautious rather than to just, leap right in. Most of the time I talk about Bitcoin, try to figure out these correlations. Is it inversely correlated to the Dixie, or is it a risk on or risk off asset? Y'all have had some great guests on over the years that talk a lot about these things and the correlations. But for the most part, I say like Bitcoin is more correlated like as a chaos asset, right? It can get bubbly in bubbles, and it can also go up the way like oil might go up or gold might go up when there's something crazy going on in the world. But more than anything, I do think it, at its roots, it is in the kind of anti-inflationary line of investment thesis. And the easiest way to describe it in different terms, but your audience is different, is to say like almost like a easy way to look at it is high beta asset to gold. And if it becomes real as a macro asset, and everything I listen to, everyone I listen to, like your podcasts or read or watch, they can't help but mention Bitcoin alongside these other macro assets. And my thesis is essentially that if that's true, then it's too small for it to become that asset for like these larger institutions, larger players. So that's kind of the way I share it with people. But when I actually talk about what Bitcoin is, I say it's money, but for the internet, and it's got different principles than, dollars. Most people can't tell you what a dollar is. So telling them what a Bitcoin is, they don't necessarily need to know about all the technical details, but it's a nuanced conversation with anyone that I talk to about it.
Okay, and so one of the, let's just say the pushbacks that I always give to people of your ilk is I always say, although Bitcoin has a finite supply, the supply of cryptocurrency in general is infinite. And I know you have a specific argument against that. Why don't you walk us through why I'm wrong on that one?
Yeah, Bitcoin is code, and it's open source code, and then it's the network that backs it. And we can get into, if you skip forward to, some of the hash rate slides and some of that stuff on there. Okay. So this is just transaction counts and fees. That's good enough. Essentially, this means that certain networks are used. Okay, so Bitcoin and Ethereum in particular, they're used. People are deciding to spend money to utilize the network, to make a transaction on the network. Miners are deciding to use, energy, create energy to participate in securing the network. And that by itself, combined with the network effects and the branding element, is what makes them unique. It is not the fact that, what exactly the code is. It's that the people that are participating in the network itself and what people decide something is. Someone can fork Bitcoin, call it something else. They can even call it Bitcoin or Bitcoin something. And those, essentially, I would equate those to attacks on this primary Bitcoin chain. And the market decides which one is the real Bitcoin, right? Because these miners have to point to something. They have to say, like, this is what I'm doing. And over time, the market decides which one's going to be the real one. Because these decentralized networks of mining operators and nodes that support the network, they are making that decision. And you combine in that people that want to transact on it, the hash rates, and what everyone kind of comes together and there's a consensus on which one's which. If it's not being used, it loses those network effects. Then it doesn't really matter that it's the same code, because everybody, they point to the one that won the battle, if you will. So back in 2017, the biggest reasons for Bitcoin's dips at the time were this uncertainty around these forks and attacks, specifically Bitcoin Cash, Bitcoin SV, but honestly, there were tons of them. But going back to like 2013, 2014, people have forked Bitcoin hundreds and hundreds of times, but the mining capacity stays with Bitcoin. The transactions stay with Bitcoin, and honestly, the price follows those things. The volume and the price follow those things. So the free market is essentially deciding, hey, this one is Bitcoin. This is the digital currency that we decide has value. And now, if you skip back to that BSV hash rate chart that goes down, you can actually see how in that scenario, this one right here. In that scenario, that's the hash rate for BSV. Now, if I couldn't put the Bitcoin hash rate on this because it's like so many multiples higher, it makes this one look flat. But what you see here is the hash rates, which is essentially the energy put towards the mining of the asset. It spiked, but it was really centralized players and mostly Calvin Air and supporting this network and throwing a lot of mining capacity, but it wasn't profitable to do, and they had to pull it down. And then it, popped up again in January 2020, and then it came back down because it's not monetarily justifiable. People mine Bitcoin because it's actually profitable for them to do so. They have to spend energy, there's a difficulty rate in what it costs to mine. And then that kind of creates this cost per Bitcoin that's almost turns into a floor for how much they're willing to sell it for. And very rarely, usually in the depths of bear markets, does Bitcoin actually get cheaper than the cost to mine, which has a lot of similar parallels. I know you have a legacy audience. I love looking at, for instance, the uranium market. So what do y'all talk about all the time, right? When uranium gets so cheap, they just like, all right, we're just squatting on our mines and we're not going to do anything,
Right. Okay,
until the price of uranium comes back.
Yeah.
And it's this war of attrition in Bitcoin mining too, especially in the depths of the bear market. The strongest miners, the most prepared to deal with the down markets, they are the ones who survive when it comes back. And then they get the benefits of when profitability of mining Bitcoin comes back. And what we've seen is actually the Bitcoin hash rate, Bitcoin difficulty to mine has continued to go up alongside price. And it essentially creates this kind of rising floor because people are determining that there is demand for these Bitcoins. So they want to participate in the fight to mine them because, there's only so many Bitcoin that are mined in each block. And then that new supply that comes from all over the world, all these miners, is being gobbled up, by the GBTCs of the world. Y'all talk about that a lot. They're gobbling up like multiples of the mining supply. So there's this demand for it. That demand does not exist for these other chains, the Bitcoin Cashes, the Bitcoin, BSV, the thousands of other like zombie chains is what I call them, where they may have, someone that's doing something somewhere, but they don't have the same capacity. And there's a couple of cool tools that you can actually use to analyze this. And one is the cost to 51% attack a chain. And it is very, very, very expensive to attack the Bitcoin chain. Like if you're a miner and you want to roll back the blocks, right? It's all about that.
So wait, let's just slow down a little bit because we got a million questions.
Yeah.
Hash rate is like basically how much computing power is getting devoted to that network. Is that correct?
Yes.
Okay. And so when you see something without a large hash rate, that therefore means that it would be cheaper to get to devote your enough firepower to go over 51% and in essence take over the network.
That's right. That's right.
So this is the problem, is that it has to be big enough that it's unattainable for people to ever take over. That's
exactly right. That's what helps guarantee the security of the network. And there's a 1 hour attack cost. Crypto51.app is a website that has that. So the 1 hour attack cost, the cost to attack Bitcoin for 1 hour right this moment is $716,000 an hour. And Bitcoin's hash rate is 115,000 petahashes, I think is what that stands for. Okay. Let's skip to BSV as comparison. To attack BSV, it costs $6,900 for 1 hour. So $6,900 versus $716,000. You and I could attack Bitcoin SV's network if we threw the compute power at it, and we could do it for a little bit. Now imagine someone with power that wants to attack that network. They could cripple it. So that is essentially these miners determining that it's just not worth securing. And by securing it, that's what they're doing when they're mining it and participating in it. They are putting that energy towards it that makes it more difficult to attack. People are saying that that's okay. Like they're willing to do that for Bitcoin, but they're not for these other chains.
Okay, so that means, therefore, even if we had a fellow on last week that talked about BSV and all the benefits of BSV, and the reality is that it's difficult for anybody to actually use that because it's vulnerable to attack for a low amount of dollars. Is that in essence the argument against these smaller, quote unquote, better kind of slight tweaks to the Bitcoin open source software?
I would call them tweaks. There's like really, I call them, the galaxy brain developers that are trying to make a lot of these decisions in terms of the network architecture. Right. But yes, these forks, they make some adjustments to how they do things. They have bigger blocks or, shorter confirmation times or whatever. And in the end that, people are determining on the free market that it's just not worth it. If there was real transactions of monetary value, maybe they would change their mind. But we have this constant ability to analyze these networks and the compute power behind them, and to determine who does see them as valuable. And what we see in real life, really the two networks on this proof of work side of things that have value in that sense are Bitcoin and Ethereum. And one other element of the technology side of things, I come from the web space, specifically WordPress, and I saw WordPress grow up from 2008 when I got involved with it, and it was 3% of the web. It became, now today, it's maybe like 35% of all websites are built on WordPress. People don't do that because necessarily they think the code is perfect behind WordPress or they love WordPress, right, the software. They do it because it's ubiquitous. You go to an ad agency and they have people that use WordPress. You ask a freelancer, they know how to use WordPress. The ability to develop on it is there. I saw the network effects in real life. If someone forks WordPress and calls it something else and fixes all the problems with it, it still doesn't have the network effects, that combination of brand and ubiquitousness that makes WordPress valuable. That same concept with open source software applies to these cryptocurrencies because they are the same thing. They're cryptocurrencies that are made up of open source code, open source development, and essentially people are deciding, more importantly in this scenario, with their wallets and what they're willing to transact on, what they're willing to put dollars into, and that's what's determining whether they're valuable. It's very much a free market system.
Okay, so now it seems to be that the two competing headliners on this are Bitcoin and Ethereum. Why don't you walk me through why Ethereum's still in the game and it isn't just a winner-take-all Bitcoin and everyone else is just an also-ran?
Yeah. So there's this concept of, some people are maximalists, right? Like they love Bitcoin. They're Bitcoin maximalists. Ethereum's a scam. And then there's Ethereum maximalists that don't like Bitcoin. They think they're like the old boomers, right? The Bitcoiners. In reality, both have a lot of these strong network effects. And what I would say is Bitcoin has a narrow scope and Ethereum has a wide scope. And I would also say that Bitcoin is quite conservative, where Ethereum is quite exploratory and adventurous. And therefore, if you're looking at Bitcoin, it's mostly from this, we want to make securing the network a high priority. We want to make transacting with limited information, these small blocks, right, on this settlement layer 1, to be like really, really good. We do not want issues here. We do not want to have to deal with, putting something bad in there. So everything is super battle tested. Lynn Alden called it on your show recently a finished product. I don't know that I would call it a finished product, but it's definitely mature. Ethereum is going through like a midlife crisis or early life crisis, or I don't know what you want to call it, and it's not a crisis. It's just it's growing up, right? It's changing even from proof of work to proof of stake, which all that hash rate stuff I said completely changes the way that everything happens. So it is changing rapidly. But the big thing to think of with Ethereum is it's more of a compute layer. So you can do literally anything, like bring, for instance, borrowing and lending and all of these other concepts to the Ethereum network and run on them on, if y'all have heard of smart contracts, that's what kind of defines everything. Now you can also say, hey, Ethereum is money. I want to transmit Ethereum, with a transaction over this network. That's all true too. But the reality is that Ethereum has a much wider scope in what can be done. And people are doing literally everything from, pretty serious financial products, trying to help people debank, right? Become their own bank using a whole new suite of tools. When people come to you with this blockchain, not Bitcoin concept, that's much more the kind of Ethereum mindset, or like compute on the blockchain idea. And then Ethereum itself is really like gas. So you're using Ethereum to transact on the network. It's being utilized in the system like gas would. And it just ends up creating really fascinating relationships for how it all trades together. For people like me, I would consider myself more of a profit maximalist. I want to invest in the ones that are going to help make me money, but I also appreciate the technicals of both of these networks and a lot of the other stuff that's being developed.
Do you ever worry that Ethereum's going to win and that Bitcoin is going to be like the Betamax?
No, I don't think. I think both of them have extraordinarily strong network effects and ecosystems. There will never be one cryptocurrency that wins, in my mind.
Why do you feel that way?
Because they bring different things to the table. There are things that you can do on Ethereum that just are not possible on Bitcoin, and there are things that you can do on Bitcoin like that you would not feel comfortable with on Ethereum because of that adventurous nature, right? It's not got the same like hardness and security.
Adventurous nature just a function of there's not as much money on there, and the attack or the amount of resources needed to attack it is not as high as Bitcoin?
No, it's a whole different language that's being used to develop it. So Ethereum apps or dApps, decentralized apps, are built in a language called Solidity. And you can just be a regular like developer, not think about how the hardness of this application, like how secure it needs to be. And you can sling code around and run it on Ethereum and off you go. So it kind of is a bit riskier. And Bitcoin just will never be that way. Like making a tiny, tiny change in Bitcoin requires a great deal of consensus between the many different participants in the network.
Okay, I got it. So now let's go on and start talking about the Bitcoin or the crypto space in general. One of the things that I would love to learn more about is all the different facets of these exchanges, how people are trading them, and most important for me, what sort of leverage are they lending out against their assets? So why don't we just start with this? What are the big exchanges? How do you go about trading them? And then we'll jump off from there.
A fun chart to pull up while we do this is that one with Bitcoin where it's coins on exchange versus the price.
Okay.
So in terms of where to buy, how to buy, all that stuff, the previous one you just.
Oh, sorry.
Yeah. I know Patrick's not here. It's okay.
No, yeah,
there you
Patrick's
go.
not here. He usually runs it, stuff like that. So this is, what are we looking at here?
So what this is all exchange reserves. So this is the Bitcoin on the exchanges, which is going down while the price has been going up. And essentially that means that people are pulling Bitcoin off of exchanges and putting them off in their own wallets, a hardware wallet or a custody solution, or with another custodian, like whether it's GBTC or Fidelity or BitGo. There's lots of these professional services that do that, or just in their own wallet, like on their own desktop, or their hardware wallet, like a Trezor or a Ledger or whatnot. But people have to bring their cash and buy Bitcoin. That's the first thing, right?
Right.
Someone like my dad, when I got them in, it's like, I don't know how to do this. It's like, so you get them signed up, right? It used to be basically you go to a Coinbase account. Well, Coinbase ends up having a lot of the Bitcoin out there on their exchange. Today, there's more ways than ever to actually buy with fiat. And what we've seen is the PayPal, Venmo, Square has been a big adopter. They're all essentially saying, well, hey, we got to get in on this. Even, like the Robinhood, you can buy Bitcoin on Robinhood. Not that there's been any news with Robinhood.
Yeah, that's right. You know what?
Yeah.
I don't want to start that. Okay,
and
so you
that's
can buy
the
them on all
biggest
these
thing
exchanges, but those are for people buying a little bit on the side. I'm talking about for people that want to trade these actively. What are the standard kind of go-to ones that they go to?
Yeah. So the way the professionals in the crypto space categorize them is you have fiat on ramps. So that's someone with like ACH capability, like a Coinbase or Square or something. And then those all have the ability to withdraw those coins and then put them on like a crypto native exchange. The crypto native exchanges are it's a wild landscape. There's this idea of a centralized exchange, meaning someone has custody of that exchange. It's very similar to if you're trading on, Thinkorswim or Robinhood or whatever. And you would move your Bitcoin to those, but they may or may not have their own fiat onboarding.
Okay.
And
fiat onboarding, let's just say that you send them cash and then they buy Bitcoin for you or crypto.
Yeah, correct. And most people only really trust that to like the really big ones, right? Like the Coinbases or Square, like Cash App or something like that.
Okay.
But then they might send it to all these other places. So and they have various regulatory issues. So Binance is the highest volume exchange, and they have like a ton of cryptocurrencies and a ton of volume. All your big players in the legacy market, like jump trading or, those types of people, they're also making markets on these markets. And it's hugely profitable for them.
And it's called Binance. That's like the standard, the main one that they're trading under?
Yes, it's probably the biggest. Coinbase is also big. They have like a Coinbase Pro, which it's not like the blue Coinbase app, right? It looks like a trading interface. It looks like a kind of a Thinkorswim Lite.
Right,
and you can trade there, but the volume is spread out amongst the large exchanges that are centralized. And then this is a big part of this is they have various places they can serve. So a lot of them don't serve Americans, or they have been restricting who they serve much more in recent years as there's a regulatory crackdown. You might have seen, for instance, XRP or Ripple got sued by the SEC and a bunch of people delisted them. So the primary American friendly exchanges, people are pretty much going to stick to Coinbase, Kraken. Binance now has Binance US, another huge one that's really risen rapidly is called FTX, and they have like a FTX US. And there's like, here's what Americans can do, and here's what everybody else can do. And slowly, the other high regulatory environments, like your own Canada or the UK, they're starting to restrict where people can trade too. So the regulatory hammer is kind of coming down on these exchanges, and they're having to be a lot more cautious about who they allow on their platforms. And that creates a big gray market as well, especially once you get into derivatives like futures trading or perpetual swaps or options trading, which really none of those are available to Americans, at least in a white hat type of way. Like you got to kind of, if you want to go that route, you're at a lot more risk because you're kind of sneaking in there like under a VPN or something. And it's really the Wild West that I don't recommend for most people.
Okay. So, now, is it like obviously one of the things to think about is that all these exchanges, none of them are technically regulated. There is no regulation. Is that correct?
There is lots of regulation for anyone. Most of them operate in certain jurisdictions. So, like, there might be some UK specific exchanges that they like. I mean, the lawyers make all the money, right? Yeah. They have counsel who has helped them operate within the jurisdiction that they focus on. That's kind of those narrower exchanges. The Coinbases of the world or Kraken, those are two of the really big ones for Americans. And then, emerging would be, your FTX or Binance with their US versions.
Yeah.
They spend a lot of money trying to be on the right side of the regulatory bodies, working with, and this is on a regulatory side, trying to figure out, are we under the jurisdiction of the SEC or the CFTC or all these regulatory bodies and money transmission licenses? And we have to do it in all 50 states. We can't do it in one federal way. So they're working with, regulatory bodies in all 50 states. So one of the famous things that you'll see is like Kraken, for instance, they're like, yeah, we're available in 49 states. It's every single state except for New York because New York is impossible to deal with. So It's a very fractured regulatory landscape, but they do work really, really, really hard to enable people to do so. And in the end, the big things that make that important is you can still deposit and withdraw your coins and then take custody for yourself off of the exchange. A lot of the places where your super retail people or like, your passive players, like if they go do it on Robinhood or something, you can't withdraw off Robinhood. Like it's just kind of there, right?
Right.
Like
you actually have Robinhood credit. Whereas you're saying these other places, you can go buy one and then actually put it into your own private storage.
That's right.
Okay. So are you, when you think about the environment, you're not worried about Mount Gox or the famous one in Canada that the guy took off.
Quadriga.
Yeah. So
that was a great story.
So you don't worry about, do you worry about that anymore?
They're getting, it's getting to be less and less of a risk. However, especially as you get more money in this ecosystem, it's worth kind of diversifying where you keep your funds, right? Like if you keep absolutely everything in one place, anyone anyone can have a security issue. And the difference between any cryptocurrency where the assets, if they are, say, like siphoned out, stolen, lost, hacked, something like that, they're gone. It doesn't matter if, like, Grayscale could have that level of event, right?
For sure. And so why don't we talk about that? How do companies deal with that? Like, one of the big things in terms of from an institutional perspective, and I don't know how these people feel comfortable about this, but when a teacher's pension plan goes and buys gold, they go and they stick it at a bank, which is a regulated institution. They see the bars, they know the procedures, and it's going to be very difficult for anyone to actually steal that gold out of there. Now, when that same teacher's pension plan goes and buys cryptocurrency, it in essence ends up being just a password. And I know that they've gone and they've created some sorts of security to make it so that not only one person's needed. There's all sorts of different parts of it have to all come together for them to do it. But why don't you talk to us a little bit about the challenges that were faced by institutional investors in the securing and making sure that they're, from a fiduciary point of view, that these investments were responsible.
Yeah, so they haven't made like a diehard about stealing Bitcoin out of these custody solutions, like they did for stealing the gold out of New York City.
Yeah.
But honestly, from an infrastructure standpoint, some of these, like especially these big custodians, and honestly, the custodianship game is huge because they all see exactly what you just said, and therefore, the Coinbase has a custodianship program. Fidelity introduced one. BitGo is more of like a crypto native one that's been around for a long time. Grayscale, I think they may use BitGo in the background, but they are essentially putting together these mega vaults underwater, or not underwater, like, underground in like Greenland or something, with these massive security infrastructures and policies in the same way that you would secure a bar of gold or like a depository of gold, but it's all for software and private keys. So they're getting much better about their security solutions, whereas your Quadriga, like the Canadian dumpster fire, was just like some guy in his living room who had the private keys for hundreds of millions of dollars worth of Bitcoin on his desk or something,
right?
And full control. Whereas there's like multi-sig solutions. So, like 4 executives from this institution have to take certain activity to move this Bitcoin or else it can't be moved. So the maturation of the security processes has really improved and is constantly improving. At the end of the day, those custodian solutions are really where you'll want to go as an institution to manage crypto assets, because for them, the percentage of their overall, crypto they have in storage, it's not that expensive, like on a percentage basis. But like Michael Saylor probably doesn't have, a desktop computer with his Bitcoin private keys on it.
It's not on a USB drive around his neck.
Right. He has a much more hardened security solution. And it's like anything else, the way that you secure it, either irresponsibly or responsibly. If you leave your $10,000, fancy road bike in your front yard unchained, like somebody might take it. But there's ways to secure it, and it's getting safer and safer. The biggest difference is, and this is where I don't know every answer, but like the insurance around that. So like a lot of like a Coinbase, I think they have kind of the not FDIC, but FDIC equivalent level of insurance. So if they get hacked, like you may have maybe $250,000 worth of insurance on your holdings there. And that may make you make a certain decision about who you're going to trade with or exchange with, because you do have some degree of comfort because they've insured their exchange themselves.
Oh, I didn't realize that. Okay, yeah. So listen, I want to talk about leverage now, because I'm convinced that there is you mentioned a few times GBTC. There's an ARB where people go and they deposit GBTC. They deposit coins or money, and they buy GBTC, and they get this ETF for, it's basically a 6-month hold. And what they do is they hold that and hope that when they go to sell their GBTC, they're going to do so at a premium. Generally, forward futures trade at a premium, if I understand correctly. Like there's positive carry in shorting the futures. So you have this great arb where you go and you buy GBTC 6-month paper and you short Bitcoin futures against it. And I hear that people are able to do this trade, lever it up, and Bob's your uncle, they're making themselves fortunes. Can you talk to me about, first of all, have you heard of any of this, and where and how is this happening?
Yeah, it's absolutely happening. It's I did an interview recently with a guy at CMS Holdings. The partner of that was one of the head traders for Circle, which was like one of the big, I don't know, venture capital backed names. And he talked about they actively participate in this exact trade. Okay. But a lot of people do. And they do exactly what you said. It's almost like, it's not quite like this because it's not really covered, but you know how like you might sell a call, right, on your shares. And if it doesn't hit it, then, you know, you bank it a little bit. So they're essentially able to collect that premium, whether they are long positioned, like they may want the underlying Bitcoin anyway, so they don't even hedge it. But they can also hedge it if they want to go about it that way. And they can do so through the many venues that have futures products to be able to do it and be completely delta neutral and just collect the premium.
And who's giving the leverage on this? Because like in typical environments, you know, one of the things that I worry about is that if we go look at the 2008 credit crisis, it was because people were using way too much leverage in a way that we didn't understand. And when I look at this, Crypto Square, it's an exciting, terrific place. Lots of people making lots of money. But I worry that there might be the same sort of abuses of leverage going on behind the scenes that we're not aware of. And I was just wondering, like, who would be on the other side of this? Who would be offering levering this up? I've heard it's 10-1 you can lever this trade up.
Yeah, there's this concept in crypto that you can actually go 100x leverage on some venues, which none of these real people do, but, you know, retail participants either outside of the US or like someone, you know, illegally being on an exchange or the exchange not really supposing to, have them as a customer, but they do anyway. With super high leverage.
So there's places you can use obscene leverage. Whatever the number is. And what is it? Auto liquidate? Is that how it works?
Yep. It's an auto liquidation of your account. So you don't get a margin call, right? Yeah. Like they're not going to come take your house because these are completely crypto native platforms for the most part.
Okay.
And just like what we talked about with spot exchanges, like, you know, just no leverage exchanges, there are various different types of leverage exchanges, but they have a mixture of retail degenerate gamblers and institutions or network participants, like a miner. If they love $40,000 Bitcoin, they may also go use a futures hedge in the exact same way that you would in the legacy market. CME has futures, and people are doing their hedging in different ways, like proper hedging.
Right. But isn't the CME margin kind of onerous compared to some of these exchanges?
Yes, and some of these, like, you really probably don't have to post a ton of collateral, but you won't want to take too much leverage in Bitcoin because you can see what happens when you get short squeezed.
Yeah, right. Or the other way, to be fair. Like, did we not have a situation in the early days of COVID when we went into an auto liquidation sell-off?
And that was a total leverage cascade.
Okay.
And honestly, there's a couple of places where things do get pretty levered up. And BitMEX was one of those, and they actually also got sued by the American government and actually charges pressed against them for a variety of reasons, but not because of levering up. But on some of those exchanges, the average leverage was like 8x. And so it can create a liquidation cascade, and then all of a sudden there's no bid, right? And it just goes wide open. And then, you know, you flip from backwardation to contango or whatever, like in minutes, and everything is chaos.
And we saw that in the like what?
Yes, that March dropped like below 5K. BitMEX in particular, they were probably like minutes away from literally being zero. But that's not reflected on the spot exchanges like your Coinbase, like a cash exchange. There's real hard US dollars there on the bid.
Oh, I see. So when I see the dip on when I look on my Bloomberg to see the price of Bitcoin, that actually reflects real exchanges, and we didn't even see the chaos that occurred in the BitMEX.
It depends. There's different tickers that you can use, but for the most part, if you look at a place like Coinbase, that's completely cash, and that's going to be a much truer representation of what the market was doing versus the mayhem and what ends up often being like these large wicks on the leverage exchanges that occur. So.
Right. Okay.
It kind of mirrors the CFD landscape, like you can trade stocks on CFDs internationally. And that's what a lot of these, like they're almost like cousins, right? The crypto derivatives exchange and these CFD exchanges.
Okay. So I got to ask you about this article that hit on Medium a couple of weeks ago. It's a Tether, a potential disaster waiting to happen. I must admit, I don't know very much about cryptos in general, and I know even less about Tether. Why don't you walk us through what this article was implying and your opinion about whether the author was onto something?
Yeah, for what it's worth, Tether's become less an important part of the market because there are many what you call stablecoin solutions these days, where the goal of those is typically to be one-to-one backed by real dollars. USDC is taking over a lot of that market, much more is put out by the Circle folks that I talked about and supported by Coinbase and the big cash exchanges. But Tether is still a very important player. However, they've done themselves no favors. It was developed by the same people behind Bitfinex, which is one of the largest exchanges in the space that has both cash and margin available to their community. But Tether, they've never been like super clear because they had a really hard time getting banking relationships because, they're saying, okay, we're going to back Tethers with real dollars and here we go. And like, no bank wants to touch this, or like, you're telling me you're like letting people buy Bitcoin with this. And, so they had this real hard time getting banking. And at one point they had some kind of failure with the one-to-one backing and had to go off the script for a bit. But for the most part, there are people and several people that I know that they put billions of dollars in yearly volume through Tether and have no concerns about it. Your real crypto native people are not going to have significant concerns. People have been around for a really long time. Tether, I would say they are trying, but their PR kind of sucks, to be quite honest. And there have been times where their backing has not been as clean as it should have been, but then they got it together, basically. And for the most part, this is a famous thing, like Tether FUD, if you will, right? The fear, uncertainty, and doubt. Yeah. It's been around literally since like 2016. And it's not going to go away. People are always going to have their theories, but Tether's in a much better place, I think, than it once was. And there's no significant reason to question their backing. And once again, the justification for that is the real players in the space are using Tether all the time and they're able to get their redemptions. That's the big thing, right? In that Quadriga example, people go to make their withdrawal. Shoot, I need Quadriga. In Robinhood's example, yesterday, people trying to make withdrawals and Robinhood's like giving them the squirm around because they have a cash crisis on their hands because they have so many issues with the way they're doing their settlement. So Tether's had their issues before, but one, they're no longer the only stable coin in town. And the USDCs and the other stable coins are making a big dent. And in general, a lot of those fears, they become almost like conspiracy-esque, and it's just really not worth bothering about. If someone said all Tether is fake, it's gone, it's not like the whole thing blows up. Would Bitcoin go down? Yeah, it'd be a day from it'd be a day you remember, right?
But you don't worry about it.
I don't worry about it.
Like that's so in essence, you think that this article is just trying to raise fear where there really shouldn't be any.
Correct.
Okay, so I have a question for you. Is there anything that makes you worried in the crypto landscape?
The biggest thing that I worry about is especially the U.S., but other like highly regulated places. regulators tend to be pretty slow in terms of adopting to new technology. And by the time they get around to it, they may or may not have done it decently at all. And the US especially was on the forefront of a lot of the technological advancements as the internet age came upon us. And, we had the boom in the 90s and the 2000s. And we are not the home for that now. Asia, whether be it, Singapore or Korea or China or wherever, has a big lead versus more Western nations that are not being very crypto friendly or crypto native, and making it very difficult to innovate in the crypto space, be it trading or custody or trying to define securities versus commodities and all this stuff. That's my biggest worry, is that they'll just stick their head in the sand and essentially make it difficult for Americans to participate in this ecosystem without going about it in a way that they shouldn't or don't feel comfortable. And it ends up making investors, speculators, whoever, less safe than if they approached it with an open mind, which some places are doing, like the state of, I think it's Wyoming, is introducing crypto banks. So an organization like Tether could get better banking. But if you're constantly saying no, then the regulators kind of fight off crypto. It just makes it to where the innovation goes elsewhere and we're the ones left behind. That worries me.
Well, okay. So now you brought some other slides for us of things that you think that should be on everyone's radar. So why don't you walk us through and tell me where I should start here?
Yeah, if we go to the DeFi side, okay. The one more thing on that last one, exchanges going on, the biggest thing that represents in my mind is that the MicroStrategy story that everyone knows about is just the one that's the loudest and the most extreme of basically becoming a crypto ETF in its own way.
Why don't you actually, because some people might not be aware of it, and you mentioned this fellow Michael Saylor. He's actually the CEO of MicroStrategy. Why don't you walk us through what he's doing and what he's accomplished with his company?
He's really brought to the forefront the idea of putting your treasury in Bitcoin, and he is trying to put the treasury of his public company almost entirely in Bitcoin. And they even took out some debt to buy more Bitcoin. So that's very extreme. But he's bringing the idea forward that people can put a smaller percentage of their treasury towards Bitcoin and get the same type of, be it inflation hedge or money supply counterbalance, so their dollars are not going as far. By putting, say, maybe 5% of their treasury in Bitcoin, they're accomplishing the same thing that they would do with a slew of other investments.
And for a bit there, he actually, Elon Musk was tweeting back and forth, and it looked like...
Yeah, it's like maybe Elon was going to do the same thing and all that. It just causes fun price action more than anything else. But we are seeing Square put $50 million in their treasury, and a lot of other companies following. Heard recently that the Harvard and Yale endowment funds both have Bitcoin in their treasuries and have been putting it in there for a year. That those coins coming off exchange while the price goes up, to me, the biggest thing that's saying is a lot of institutions are replacing these crypto whales, the individual, high roller people who are cashing out, and the institutions are really gobbling those coins up. So that's a big thing on the Bitcoin front, where Bitcoin's kind of growing up, and it's growing up, but it's not big enough to be all the way grown up, because it's not easy to allocate to yet. So all of those processes of going about, how do you put this in your treasury? Who does do the custody? That's where the Grayscales and, the Coinbase custodies, a lot of those are coming into place, and Square put out a white paper about how other companies can follow their lead. MicroStrategy is hosting a conference of 100 other CEOs to show them the case for doing this. And that's the case for, people are going to call it a bubble all the way up, but that's the case why a lot of people believe Bitcoin truly does have a top side. It doesn't have to be today, tomorrow, next year, but instead of trying to, on a comparative basis, instead of being 5 or whatever, 8% of the gold market, maybe it tops out at 20 or 25% of the gold market. Well, you have 6-figure Bitcoin, and people are going to be screaming and crying about it all the whole way. Okay. So that's the Bitcoin thing. The other stuff I just wanted to leave you with was, this is the story that you'll hear about over the coming months or years. that you probably haven't heard about yet. And a lot of this is occurring on Ethereum, and a lot of tools. We talked about trading on centralized exchanges. Well, now they're moving to what's called a decentralized exchange. So now I have let's call it Ethereum, because most of this is happening in the Ethereum network, but they're wrapping BTC, so I can even do it with BTC. I have this on my hardware wallet, and now I'm just going to trade on a decentralized exchange, meaning I'm just doing this through a website. There's no exchange custodianship at all. It's purely peer-to-peer, and there's a whole new mechanism to handle that. It's not even the same as your order book situation. So this is what decentralized finance starts with, which is the transfer of coins or the trading or the swapping of coins. And those are using tools like Uniswap is really well known. You will hear that name, I assure you, in 2021. But people are trying to build all of these traditional finance tools, be it trading, be it lending and borrowing. So like partial collateralization of loans. So if I have 1,000 Bitcoin, I'm a Bitcoin whale, I want to buy a house, I might actually lend my Bitcoin, borrow USDC, cash it out, and use it to, get a mortgage or build a business or something like that. And essentially I'm doing a partial collateralization loan, and I'm doing it entirely through the blockchain and through these protocols that are putting that together. And there's this entire ecosystem of decentralized finance, and they're trying to solve all these problems that traditional finance manages. And this stuff it's coming online with hilarious amounts of money, and like billions and billions of dollars being utilized on these tools. And it's completely software based, and companies raising hundreds of millions of dollars from venture capital firms to try to create this stuff. And this is the kind of financial disruption layer that your audience probably should do some research on, because it will become a much bigger narrative over the coming years.
And so this is almost like the dream coming true in terms of the actual technology that backs kind of crypto software being used in the real world, is it not?
It absolutely is. And people are trying to figure out how can they do absolutely anything that they could have done in the real world and pull it onto a decentralized blockchain ecosystem. And some interesting people are curious about it. Mark Cuban is talking about DeFi all the time now. And there's all kinds of stuff going on in this landscape. It's like, if you think Bitcoin's complicated, like grokking this, it was like learning it all over again. I was honestly pretty ignorant of it until mid 2020, even though it's really been going since like 2018, 2019. And this is going to create a whole nother hairball for regulators trying to wrap their minds around it too. So it's fascinating.
Well, listen, Brian, I just want to thank you for coming on the show. It's been a real pleasure having you on. I'm glad that I've learned a lot. I look forward to staying in touch. For those that want to learn more about yourself and your podcast, where can they find you?
Yeah, they can search for it under Ledgercast in any podcast app or on YouTube, or ledgerstatus.com has that. It's mostly technical trading information. I'm a speculator first that's fascinated in the technology. And that's about it. I love the show.
Oh, thank you
very much. You
didn't
ask, but I'm drinking a Lagunitas Daytime IPA.
I was just going to ask you that, actually. I forgot. I realized you were ahead. It's only 2 o'clock when we're taping this, when we started, and you're a true huddler. You're starting early. Lagunitas, is that from San Diego? Have I got this right?
Yeah, it is. It's a San Diego brewery. Does a great job.
Yeah, I've been there.
And the Daytime IPA is like it's their skinny beer, you know?
Their skinny beer. It's your light beer. Have you been there? Are you a fan of San Diego?
I am in the humidity of Alabama, so when I can get to San Diego, it's like heaven.
I am. It is my favorite city in America by far. I love San Diego.
It's wonderful.
If I could go and retire anywhere, that would be where I'd go to go. So listen, hopefully the next time when we talk, we can do it in person over a Lagunitas in San Diego. How does that sound?
Count me in for the Huddle meetup.
Okay, sounds great. Thanks again, Brian.
Guys, I just finished my beer. I'm going to quickly get another one. Hold on. All right, I'm back. All
right, Patrick. Lots to talk about this week in Talking Charts. What do you have for us?
Well, let's just quickly start by reviewing what was our top 3 things last week. And the first thing that we oh shit, sorry, we're gonna have to start again. I accidentally minimized my shit here. Hold on.
No problem. Tell me when you're ready.
Yeah. Fuck. I hate when that happens. All right, do it.
All right, Patrick, it's time for Talking Charts, and there's no shortage of things to talk about this week. So what are we going to get at?
Well, before we get to the actual charts, let's review what was our top 3 things to watch last week, and a couple really interesting ones. The first one was lumber and home builders, and we were asking that question whether that the breakout was for reals, and
Whoa. For reals?
For reals.
You've been hanging around with the kids too long.
Yeah.
Is that because you're hanging out at Wall Street Bets all the time now and you're picking up the lingo?
Yeah,
Did you make lots of attendees this week?
There's plenty of them. Anyway, let's just have a quick look at the chart. So we got lumber here, and that just kept following through, right? Like this breakout just limit up and just kept going. I mean, we're
running like it stole something, Patrick.
Yeah, it looks like 1,000 is really in reach now on this March contract of lumber. So it's certainly something to watch. And when we look at the actual home builders, this is the ITB, a little bit of selling pressure from what's happening in the market, but it did break out. And it's going to be really interesting to see in technical analysis often what is overhead resistance initially becomes support when it's broken. So it'll be really interesting to see whether this is bought on dip into this little pullback, or whether it succumbs to the broader stock market sell-off. But the second...
But one second, Patrick, I don't mean to interrupt, but I don't practice the dark art of technical analysis, but to me that has all the makings of a prairie dog, does it not?
Oh, if it dropped to $54, like if it went all the way back down, then it would classify as a prairie dog, but also becomes vulnerable to being that's ahead of a head and shoulders pattern, and that could potentially start a sell cycle. But it is way too premature to be putting the nails in the coffin on this.
A prairie dog followed by a head and shoulders pattern, failed head and shoulders pattern is awful.
It's awful. It would be disastrous. No.
Yeah. Okay. What's number 2?
So the next number 2 was will there be new leadership in the market? And really, with this kind of heavy selling, there is no leadership anywhere to be found. Really, did anything come to mind for you?
Well, unfortunately, the real leadership was in the heavily shorted stocks, and those outperformed by a huge amount. Anything with a heavy short interest was rocketing to the moon. But we'll talk about that. Yeah. There was no real, proper leadership. Let's put it that way.
And interestingly, the number 1 was the FOMC minutes and conference. And one of the things that I was thinking about that was, and I was sharing with my members, I don't remember whether I talked about it in the show, but I was saying that often there's key turn points in the markets around these meetings. And it's really interesting that the market kind of peaked out just the literally going the day before into the FOMC, and then it's been selling since. What did you take away from what was said?
Well, first of all, from what he said, it was interesting because they asked him if they were going to go and try to tamp down the speculation that we're seeing. And he said, no, it's not our purvey. We're not going to touch it. But I agree with you, Patrick, that oftentimes, even with some bullish kind of chat, it still often marks the turning point. I did a study that I wrote up in my letter that actually showed that the FOMC drift, which was the tendency of stock markets to rise going into the FOMC meeting, although it's become less pronounced over the last few years, it's definitely, there's an FOMC hangover effect where the next day both stocks and gold often, sag. Yeah. So I concur.
Yeah, and so so that was last week. So let's talk about our top 3 this week. And so the first thing that we wanted to talk about was that a fake out or a breakout on Bitcoin, because Elon Musk kind of got into the tweets, like, because he doesn't have anything else to tweet other than Bitcoin, clearly. But he,
in terms of Elon Musk, that's a huge uptick. That it's not something a 16-year-old boy would send out. I'm really proud of him. There was no juvenile
Well,
humor this week.
now that he's the richest man in the world, he has to kind of bump his standard a little bit
That's right.
higher.
He has to appear the part.
Yeah. So anyway, but looking at the chart, the reaction was pretty sharp to the upside, but they gave it back. And that's a big, at least when I study charts, like that's a bad sign. Usually when a proper breakout out of a wedge occurs, like what we had was a scenario where it came right to the 50-day moving average, found support and turned up. That often is a very bullish thing. And we're not below the 50-day. So there isn't anything bearish to say on Bitcoin from that element. But usually when a breakout of this kind of magnitude happens, usually it sparks a feedback of buying that follows through. And one of the bearish signs is that if it was a positive reaction and then the sellers sell into it. And so it's a very, I'm on the fence here. It's a bad sign that the bulls couldn't hold it there in the 38,000 range into the close. And any thoughts on your end?
Patrick, I like hearing you talk technicals. Like, that's awesome. I don't have anything to add. To me, you sound like you're kind of bearish, but I'll let you straddle.
You know what?
fence.
It has not broken the 50-day, and it hasn't broken retracement. So it has been a very ugly pullback, but we have not seen the back of the bulls broken on Bitcoin yet. So I wouldn't want to rule them out. But it is. I would say it's a little bit of a disappointment for the bulls that they didn't hold it. Anyway. Number 2 was has the global equity correction begun? And what a huge question to ask. And let's start with the S&P. And you know what? The S&P doesn't look uber bearish yet. And what's interesting is where the support once again came in on this. So let's quickly put that 50-day moving average on there. But like we're hovering right at a very key moment.
Because it closed right on it.
Right on it, and to me, this is a very important arbiter of this trend because like even if you go back, like look at the way back in the June sell-off, the way the 200-day and the 50-day held the sell-off. It was 3 days of selling. It came to the support and held. Even these very short-term breaks below lasted only a few days. Overall, in a bull trend, the 50-day moving average tends to be an arbiter of the primary trend. And what's a little bit scary, and we'll talk a little bit about it. Actually, we'll talk about it now. But what you'll see here is that when sometimes you get that break of the 50-day, sometimes the market takes a life of its own. And if there's enough imbalance, and it creates that kind of air pocket underneath that creates the selling feedback loop. Usually, higher volatility makes everyone degross, and it creates that liquidity event. The question is, are we seeing this? But now, while the S&P 500 is at this important crossroad, it is worth seeing what is happening in global equity. Now, I'm going to start off with some of the hottest global equity markets, like, for instance, go to the South Korean Kospi, right? And this back in December, going into early January, this was one of the hottest markets. I mean, you had basically that run from that November bottom. You had a 43% run in the Kospi to the upside, and its correlation is pretty strong to the semiconductors, which is what drove a semiconductor. I think it contributed to the semiconductors doing very well in that last cycle. The fact that we double topped, or it's equivalent of a double top, and the fact it's breaking down this way, that is technically not good. I mean, it really does signify that some sort of a correction is underway. Interestingly enough, another really strong market was India, Bombay. And when you go to the Sensex here, it was one of the hottest markets going through that October, November, all the way into January. Just that run from that low was also about a 37% run, and it just ran. And it started to sell, and this was sort of when this started to break. It made me ask the question as to whether the emerging markets, the EEM, was going to succumb, because this was one of the more important markets that were running it. But even China A50 failed to break to a higher high and then has broken out of below this consolidation. You take the Nikkei, the first breakdown candle after a very strong bull run over there. Like, you're starting to see cracks in the armor, and so it's not just an American market sell-off. This is not just the U.S. equities overdone, but it really seems like a much broader equity downturn has begun here. Interestingly as well, there was something that's equivalent of a prairie dog on the London FTSE, right, where it just broke out, looked like it was ready to go to like 7,200, and it's just been selling ever since. And so you're seeing a lot of these broken global equity markets. And when I see that, I don't think it's just about an S&P with a 50-day moving average. And with the way the global markets are selling, maybe a bigger market correction has actually begun.
Patrick, I was so proud of you. You used the word arbiter, which I can't even say, and you used it once. And I thought, wow, he really nailed it. Didn't even hesitate. And then you went back and you stumbled on the second one. You should have just left. You should have just let it gone. You should have just used it once. You used it, a big word in a great way.
I failed. It's my mistake.
You did it.
That's it. I'm going to have some more beer.
After shooting the basket, and then you came back and decided to play for the Wizards. Okay, what's the number one thing that you got?
Are the Reddit, the Wall Street Bets kids going to run silver? I mean, there was that one post that they put out there that they want to take silver to 1,000 and squeeze the silver markets. And well, silver really did turn up on it. Not anything like a GameStop, but it really has. Turned higher in the 2 days of trading since that came out. And what's really interesting is can this be enough of a sentiment shift? Can one Reddit post just be enough to turn the tides in the precious metals markets? Boy, it's one of the more interesting things that I'm watching. I don't want to already say that this is money in the bank on the breakout, but the more green that investors see, the more they are convinced that there's something happening there. Maybe it takes a life of its own. Watching whether silver follows through above 28 next week is going to be definitely one of the top things to watch for me.
I completely agree. Don't underestimate those WSB kids. They are big. They are huge. They took down a multi-billion-dollar hedge fund.
Yeah. But you know what? But I actually we could talk more about them right now in terms of these, because now that we're done these top three, let's talk some other charts. But let's actually take a look at what they did. Let's start with GameStop, right? And wow, right? Like it. Unbelievable! That stock. Remember the days when?
$20 2 weeks ago.
Remember when this chart looked like it was a big uptrend and it was too late to buy?
Yeah. No. Listen, I got it completely wrong. Like, in terms of the power they have, and the absurdity of it. Like, listen, I saw Leon Cooperman on TV, and I tend to agree with him about his analysis about what ultimately happened with GameStop, but in the long run, I'd be shocked if it was worth anywhere near this amount. But in the meantime, that doesn't mean they're not going to keep sending it higher. And I've just completely underestimated the power of this group, this ability to amass an army to do it. Now, Patrick,
social justice on the keyboard, just by clicking
thought,
some.
Though, that they're somehow sticking it to the man by buying GameStop at $325 is so absurd. It's not like I can't even tell you. No hedge fund is short anymore. They just aren't.
So then, what's the open interest?
I know there's lots of shorts out there, and I get it. But nobody is short to the point where it's going to bankrupt anyone. Maybe I'm wrong. Maybe the hedge funds are lying. But I just don't see them doing that. I got told that from institutional players that everyone's having meetings, and all their clients and the fund of funds are getting together asking what everyone's exposure to GameStop is. I can tell you, if you have GameStop on, you're probably flattening it because you don't want to answer the questions why you're short.
Yeah.
So I think it's gone what was originally a squeeze, and there's no doubt they squeezed them, but I think it's now just become a full-on, bubble mania. It's going up because it's going up.
But what also is weird is the unintended consequence to it. Like I know that you tweeted this out, but when you look at something like the Spider Retail ETF, like GameStop a few days ago was a 20% weighting into this. Now it's down to about 12%.
Yeah, this is the XRT, which specializes in that. It's actually been a great way to play it if you were interested in trading, a little bit of a tamed down version of GameStop. You can
like look at the chart on it, and it's weird because this ETF doesn't own any of the Walmarts and Costco's. It's a lot of the kind of smaller retail names, and so it really picked up that juice on the upside when GameStop started to go. But the thing is that there are conservative people that are buying ETFs to hold them as long-term investments that don't realize that they are literally putting their money into GameStop by buying this ETF. Like when the other day when it was like a 20% weighting, like that's 1/5 of your money that you're putting into this ETF is going into a stock that is just running on pure fuel of momentum of money flow. But that when everything starts to revert back to its fundamental value, this stock could be a $10 stock again.
Yeah. Well.
Right.
I completely agree. And you should be careful about it with XRT.
The ETF is the bag holder. The ETF will be the bag holder on the way down because no one knows that they own it.
Patrick, don't you realize, though, the future is digital games? GameStop's going to change the world.
They don't make games.
They're a retailer. No, but they're going to rent out games, and everyone's hodling. Hodling? I don't even know how to say it. But don't worry, the kids are going to figure it out. They're not going to lose on this. Everyone just hodl together.
And the Canadian little baby BlackBerry has been getting the squeeze as well. Like it went from $6 to 28.
It was funny, wasn't it? Listen, anybody who's complaining, be careful what you wish for. Like this is like I hope everyone's safe. I hope everyone trades in a matter in an amount that makes sure they don't get hurt. But having said that, like think back to like those dull summer days when nothing's happening and you're just dying, So be careful.
Well, listen, I've got my bag of popcorn and I'm entertained. I'm watching this shit all day, like laughing.
Listen, but even like as traders, this is great. This is great opportunities. And
are you whipping these things around?
I'm unfortunately trading them. I get in there.
Unfortunately,
a trader's got to trade, but just be careful for when you're complaining about it. Just be careful what you wish for, because the opposite of this, which is nothing happening, is way worse.
Yeah.
And just trade smaller. That's one advice I give everyone. If you're used to trading 1,000 shares of a stock that's $80, like let's just take that index, like XRT. Yeah. What's the price of it? $80, $87. Like if you're a trader that's used to trading 1,000 of those. Well, the vol has gone way up. You shouldn't be trading 1,000 anymore. You should be trading 200.
Yeah. Well, and it's also a much higher dollar value too, right?
Yeah. Okay, but regardless, you should be adjusting for volatility. So adjust for volatility, and this is a great market to trade.
Yeah.
And I just hope everyone stays safe because, let's face it. I agree with you. The GameStop, it'll be tough for everyone to exit. I don't know who these kids expect to sell it to. They were all cheering when Melvin said they covered. I go, well, that's who you should be selling it to.
Yeah.
But anyways, I obviously don't understand.
They need to read some reminiscences of a stock operator and realize that you need someone to sell to in order to actually get out of the trade, right?
Yeah.
They'll be tripping over each other. Anyway, so that's what I wanted to talk about. Is there anything else that you had on your mind that you wanted to throw up?
No, I don't actually. I always count on you doing all the voodoo magic.
Well, there you go.
I'm kind of a little caught off guard.
So that's where we'll wrap up the talking charts.
Okay, so what do we got now? We have This Week in Trading History. Patrick, what do you have in store?
Well, this week I want to go back to January 25th, 1996, when rumors circulated that Sun Microsystems was in talks to acquire Apple.
Whoa. I don't even remember this.
Yeah. And so with Sun at its peak of its power and market cap, and Apple struggling without Steve Jobs, the rumor was, now get these numbers, okay, Kev? The rumor was a $3.89 billion deal where Apple would be snapped up for $5 to $6 a share.
GameStop could buy them.
Yes. with 1 day of gains. But
Yeah,
can you
right.
imagine? Okay, so let's talk about this. So if you're a millennial or younger, there's a good chance you don't know Sun Microsystems, and it probably means very little to you. But it was one of the most notable companies to collapse as a result of that late 1990s tech bubble. It created Java programming and the Solaris operating system.
They were the original Unix system. Much of the internet ran on Sun Microsystems, and all of Wall Street, really, and Bay Street definitely ran on Sun boxes.
Yeah,
I remember buying, like in 1998, we bought a $40,000 machine to trade with. $1998. That's like $100,000 today or something.
That's crazy.
Yeah.
And so just kind of going through the history. So it was founded in 1982. Sun Microsystems became a big player in Silicon Valley before collapsing and eventually being acquired by Oracle in 2009. So that's where the reminiscences of it are right now. Today, it's the iconic former campus is the main headquarters for Facebook. And supposedly, Sun's logo remains on the reverse side of the Facebook sign.
I had no idea about that.
Yeah,
that's a great little tidbit.
And so nonetheless, so the management met with Apple's board in New York to begin working out a deal and a stock swap that would leave the Sun CEO in charge of everything. But ultimately, negotiations fell apart as Apple announced a massive, get this, the word massive, a massive $69 million loss. A million. It doesn't even have a B on it. And so Apple reports a $69 million loss, and they walk away from the deal. And in the end, later that year, 1996, everything changed as Steve Jobs was back at Apple, and Apple was primed for its comeback. But can you imagine how things would have been very, very different if this deal happened, eh?
Wow. So, Patrick, I just sent you a link. Go check your email.
All right.
It shows the sign that you were talking about. That is.
All right, Lena, you're going to have to put it in here just so everyone can see. Anyway,
okay,
but
we'll pretend Patrick didn't say that. Okay, so is that it? Is that for your story?
Yeah, that's it. We'll pretend Patrick didn't say that. All right. Okay, let's go on. It's time for No Stupid Questions. Lena, hop on.
Hello.
Hello, Lena.
Hello. Well, Lena, what do you have for us?
Patrick, you got to change
Patrick's
the
having
screen.
some
I can't
trouble
see
today.
the question.
He's enjoying himself too much in Barbados, I think.
He's in the
having a
very
little trouble.
fancy prison right now.
Yeah.
Okay, so first question. All right, my questions. In markets like lumber, I checked out lumber futures, but the illiquidity of the markets and their ability to lock limit up or limit down is intimidating. The options are bone dry too, at least if I understand my brokerage correctly. How do you properly manage the illiquidity and circumstance if you enter these types of positions? Are futures spreads a good way? I've enjoyed a lot of the back and forth between Patrick and Kevin on disinflationary versus reflationary hypotheses. Obviously, reflation has been a big winner lately, but we are seeing some signals that is turning, at least in the short term. What I'm curious to know is, at what point do both of you change your minds, especially Kevin? When does Kevin buy treasuries? If we go back to business as normal, banks, TLT, gold rallying, commodities going down, VIX, TLT, gold, SPY, correlations getting less shaky again, when are you tapping out on reflation, and vice versa if we continue to reflate? Thanks, y'all, for all the great stuff.
All right, Kev, you start. That's funny. You buy bonds. Like that's the funniest thing I've ever fucking heard in my life.
Literally laughed out loud. Well, why don't you start with the lumbers and the options and give them your take on that, and then I will follow up with when I will give up on the reflation trade.
All right. Well, listen. The illiquid futures markets, you always have to kind of trade a little bit smaller and you put limit orders in the middle, and you have to accept the fact that you're participating in a very large market, but not a very liquid market, and so you just have to take it a little more easy. It's certainly not where you would focus day trading. That's where you have to have a real position stance, and then you put it on. It's always one of the reasons that deters people from going to those types of markets is it just doesn't have the liquidity that you get in some of the markets like crude oil, right?
Well, the other thing is stick something in the middle and see what they do. A lot of times just because a market is not posted as a good bid offer doesn't mean you can't get stuff done in the middle. Mm-hmm. And that would be my advice. Now, on to the real important question. When will I give up on the reflation trade? So my reflation hypothesis is based on the idea that although many believe that we are tapped out in terms of debt, that as a currency issuer, we are much different than a currency user, meaning that governments can always create inflation if there is the political will to do so. And I think COVID is a perfect example. Going into COVID, there was many people who did not believe that we could create inflation. They did not believe that we could, fix the economic hole that was created by this massive, shutdown of our economy. Yet governments went and printed and pushed that money out into the system. Now, this is much different than what happened in 2008. 2008, the money wasn't given out in a fiscal manner. It was given out in a monetary manner. And so I do not believe that monetary stimulus creates inflation. I believe that fiscal stimulus creates inflation. So when you ask me when I would tap out, I would tap out if I saw the narrative starting to change towards fiscal, deficits. If I saw the people in power winning the argument that says, oh, we can't leave this to our grandchildren, we have to balance the budget and things like that. If all of the kind of deficit hawks return, then you know what? I would probably give up. I would say that there's a very good chance that what'll happen is that it'll collapse in on itself. And then what you see is that's what's happening in Europe. Europe refuses to spend. They keep trying to fix everything with monetary stimulus, and it doesn't work. So ultimately, that's, to me, what you need to watch for. But having said that, I don't see any signs of that occurring. And in fact, I think that given that the governments have got a taste for it, I think they're just going to continue. Like all things on Wall Street or in the markets, they've gotten, it'll be taken to excess. So I fully expect that the fiscal spending will continue and will even accelerate from here. Patrick, how about you?
He's asking you when you're going to admit that you're wrong.
Well, I'm not going to admit I'm wrong in that if I saw the conditions changing such that, we would see these deficit hawks return, I would change my stance, my portfolio, positioning.
Yeah. I
wouldn't be in so much reflation. Because at the end of the day, if everyone believes that all that debt needs to be paid off and all that debt needs to, we need to balance our books, it's not going to work and we aren't going to get inflation, and they are going to be correct. They will be, basically, if the Lacey Hunt view of the world, it gets accepted, then what will happen is we will create our own kind of self-fulfilling negative feedback loop that causes deflation/disinflation.
Right.
And I've always argued, though, that upon that would be such pain that we would eventually inflate. And I still do believe that. So you will never get me to buy bonds. I won't sit there and say, oh, bonds at, 100 basis points in the 10-year are great, because I'm going to sell it to some other idiot that's going to pay 0 or even minus 50. I'm not going to play that game, because I think ultimately when I look at the risk rewards throughout history, I don't know any countries that have collapsed because of deflation, but I can sure name a lot that have had some trouble with inflation when things get bad.
Yeah.
So that's, to me, it just at 100 basis points.
Good enough.
Okay, good enough. What do we got for the next one?
All right, Lena.
Good evening. This first question is for Patrick, as long as he survived the camping trip. Would you ever open a trade based solely on charts alone, or do you need some catalyst in order to open up the trade? My second question is for Kevin. What do you do for profits from a winning trade? Also, Lena, you should host a podcast. The after show isn't enough.
Oh, there you go.
Nice.
I agree with that.
The after show with Lena. After hours with Lena.
So would I ever open a trade based on charts alone? Well, first of all, my entire philosophy is always top down. So I always have a macro narrative, and I love trades that line up with the macro narrative. But I do take trades based on technicals alone. You sort of, if there's a breakout or something, you can always test it out, put some skin in the game and see what happens. I tend to be hedged out on my trades. So it's always worth seeing what happens. But usually afterwards, you want there to be a real catalyst that is going to drive the move. And if that catalyst isn't emerging and the trade isn't following through, then you just exit. So sometimes I shoot first and then ask questions later. But usually the best trades are the ones that do have a good macro backdrop behind them, right?
Patrick is from the Ready, Fire, Aim school of trading.
There you go. But it's time for you to answer your question.
My question. So what do I do with the profits from a winning trade? That's assuming I have profits.
That's rare.
That's rare. Truthfully, I don't actually view profits as any different than any other part of my capital. Over the years, I've learned the hard way that I used to go and view playing with the house's money like something when I would try to push trades. I would go and increase positions and change my trading. I always thought I was going to be like George Soros and Druckenmiller. It takes courage to be a pig. I can't do that. It just doesn't work for me. I've tried. Basically, what ends up happening is I end up taking too much risk, and inevitably I tap out at the wrong time. So for me, I don't view profits as any different than any other part of my capital. I try to, maintain the strict risk discipline throughout the entire portion of it. And so whether it's a profit or whether it's part of my initial outlay into the trade, it doesn't really matter. It just doesn't. Right. It doesn't enter my thinking at all.
Right. All right. And Lena, when are you starting your new podcast?
It's in the works.
All right. There you go.
Okay, last question for this week. Quote unquote experts keep telling me that we need inflation, that inflation is linked to economic growth. If economic growth means I can't afford to buy my second bottle of red wine in my weekly grocery shop, or I've got to commit to $1 million mortgage to buy my first home. The experts can keep their economic growth and kindly put it somewhere that's very uncomfortable for them. Looking back through history, there's plenty of examples of what weak economies that have inflation. Their reasoning for inflation seems BS to me. What am I missing? This has turned into a rant, so I'll ask a question. This question is for Patrick. Does Kevin's voice match his face? It seems like it doesn't. But I'm just going to go off on what I hear on the podcast versus a couple of pictures. In real life, does Kevin's voice match his appearance?
Okay, so wait, I'm going to jump in here.
Okay.
So, I wanted to look like Brad Pitt and have a George Clooney voice. What I ended up was I looked like Larry David and sounded like George Costanza. So
there you go. Okay, you answered the question.
But that's okay because I make it up with Tom Cruise's height. I'm sorry that I don't match. I've heard that before. I think people thought either I was going to be like a Russian mobster, kind of tougher sounding, or I don't know. I'm not really sure. What do you think, Patrick?
You know what? I never thought about it. I've always known you, and your voice came along with you. I never once had the I think what happens is that when people listen to you on a podcast for a while and then they see your picture, it's not what they envisioned it. But because I met you initially, I never had that. So no, I don't know how to answer it. But let's go to the inflation thing. And I think the way I would put it, and you can kind of push back on it, but in a fiat system anyway, money supply is perpetually growing, and therefore it's perpetually being deflated in terms of its purchasing value. And therefore, inflation is a very normal part of the economy. And by creating money supply, it creates more economic activity. When often commercial banks create the credit, that credit is being spent, whether it's to start businesses or buy things, which keeps the economy going. So that's where that argument really comes in. But that's just the nature of the beast. I don't know whether through history there was an economy that always had a static amount of money supply. Even when gold and silver was around, they would always be mining more, and therefore there was always some form of inflation from the increase of the amount of gold and silver in an economy, right? Like the Spanish when they discovered the silver mines, right? It's Anyway, to me, money supply expansion and inflation are a normal part of it. What's your take on it?
Well, I understand the listener's question is like, why are we trying to create this inflation? It seems like inflation's not a good thing. Why would we go out of our way to make it? And although I sympathize with that, especially when it comes to the bottle of red wine, you don't want that going up faster than your income. Having said that, there is a lot of debt in the system. And unfortunately, when you have a lot of debt in the system, any sort of push into deflation kind of creates a self-fulfilling negative feedback loop.
That will collapse it.
And you have to avoid that at all costs. And maybe we should have never allowed ourselves to get to this amount of debt. That could be. I'm not here to judge that. I think the Austrians would tell you that that's not, that's the proper way to do it. And they would also tell you that what we need to do is go through a cleansing, very big, recession/depression to get rid of that debt. But having said that, in the meantime, it's there. And if we don't go and continually try to make inflation, we, in essence, make the real burden of that debt higher and higher. And it becomes kind of more and more of a burden on our economy, and it ends up hurting our real economic growth. So that's ultimately why I believe the economists will tell you that we should have inflation.
And the one thing I'll just add to that, because it's so important to consider, is that really in a properly functioning system, wage inflation should be keeping up with it. So while the bottle of wine is rising and the cost of the house is rising, so should be your wages in some relation. Like if you go back to 1913, the average annual salary was $1,000 a year in the U.S., but you could also buy a house for $5,000 back then, right? It was all relative, and though it's $1 million for a home today, the incomes have also risen, and so long as incomes are inflating the same way with the cost of goods, usually that doesn't that allows people to be able to benefit from that. But we are seeing a period where wages have not been moving along with the rate of inflation, which is where the real problem comes in, right?
I completely agree, Patrick. It is actually the problem and the thing that politicians and economists are going to try to solve in the next decade, and probably will affect
universal income. Just give everyone money.
Well, anyways, it's going to listen. This change will probably affect financial markets for decades to come. So we'll be talking about it more in the coming show. Yeah. So Lena,
where can they send their questions?
They can submit their questions to nostupidquestions@markethuddle.com.
Yeah, no stupid
and also
questions,
send us some side
answers.
effects as well. Yeah, just stupid answers. It's mostly that. All right. So skin in the game, Kev. You won one.
I got one. Why don't you tell people what I managed to actually win one? Because you know what? I had such a good run when we first started. I felt like I really had you, and then you figured it out, and you started picking me off. So I was a little upset with that.
You know what? And I probably... my intuition was to go a little bit lower, but you just got the benefit of the fact that the whole market got hit, right?
Yeah.
But hey, that's what happens when you're gambling, right? It's there's no certainties in that. But anyway,
so tell people what it was. It was Netflix. It gapped higher. You
Netflix
said
said 335.
535.
535.
Yeah. So I won by Tuesday.
Yeah.
Or Wednesday.
Yeah, Wednesday, when that big break happened on the downside, it shot down to 520 and you were laughing. And you're going to get a burger. Congratulations. I hope the burger tastes great. Yeah. Right? Anyway, so why don't you quickly
okay. So
give
Skin in the Game is a
and
weekly opportunity. I'm walking all over everyone today, Patrick. I'm having some trouble. Okay, Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode, and the currency for the wagers is as follows: a Duke and Duke, which is a crisp U.S. $1 bill, a pint of beer, a burger bet, a pitcher, a case of beer, which in Canada we call a 2-4, a bottle of wine with a $100 limit, and finally the steak dinner. We still haven't got a steak dinner. I'm really...
Well, you know what? One day, one of us is going to make that bet that the other person feels 100%.
That's true. We haven't been doing it that long, so we shouldn't be I shouldn't be panicked that we haven't got a steak dinner.
It's going to happen. We can't force it.
That's true. You really can't force it. The winner of the bet is obligated to create a new bet for the following week. All wagers settle in full, and there will be no netting of positions. This is pre-2008. Okay. So, Patrick, I've been thinking about it, and we got to do GameStop.
Oh my God! All right,
Come on, this got
Let's do it.
Okay, so here's
do
the
it.
deal. It's going to be a double one touch.
Okay.
The two numbers are
Okay, so let me
475.
pull up the chart.
Pull up the chart so we can all see it.
So
Patrick doesn't
double
know
one
what
touch.
this is. We don't rehearse this at all. If it's not abundantly
475,
clear by
the
us
previous
stumbling
high.
on everything. 475,
Right.
$200. Next week, does it touch both numbers?
Well, I have to say yes.
You're choosing yes.
Yes, I am.
Nice. Okay, great.
I think it's fully capable of that.
It's fully capable. I agree. I'm hoping that the top was in, and then I'll sneak it out there. I was going to go $500. If I'd gone $500, would you still have said yes? You don't have to say. You don't want to give away
I
your
probably
hands,
would have. I probably.
I
Listen,
would.
I'm not ready to go too high on that. I'm saying I'm going to start off with a pint of beer. Is that a good place, or you feel higher conviction?
I'll go higher, but if you want to end it there, I'll just end it there.
Well, you know what? I want a burger so that we can both be sitting and eating burgers. Fine. Let's go to a burger bet.
Okay, you're on.
All right.
Okay, burger bet it
bets.
is.
All
So
right.
Lena, 475 and 200. Patrick thinks it hits both. If it doesn't hit both, I win.
On GME. All right.
Nice.
So
That's it. Let me do the outro
That's
here.
it.
Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle on Twitter. Give Lena a shout out. She gets tired of talking to Patrick and myself. You can listen to the Market Huddle on all the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts, visuals. And while you're there, please like and subscribe to get our latest content. Smash the like button, the kids tell me. And please, if you could, rate us and review us on iTunes. It's a dumb game, but it helps us out immensely. Patrick, where can they find you?
you can find me on Twitter at Patrick Ceresna and follow me at bigpicturetrading.com. Kev, where can they find you?
I'm on Twitter at Kevin Muir, and you can go check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bull market, bear market, we're just happy to spend some time together on this crazy ride. So thanks for tuning in, and now stick around for the after show.
All right. Well,
Okay.
we only had like 10 fuck-ups throughout that session.
Yeah, no,
Was that
that's
right?
good. I was fine. I stepped all over everyone. I think it's because you guys were too low in my cans. That's what the
Maybe
ratings
Lena-
somebody's
say.
hearing aids.
Yeah, that's probably true, Lena. Okay, so let's do this. I'll start with the rating.
Yeah.
The banana. I'm still thinking about the banana in the beer. It
Yeah,
did have
but
a
if
little
you
bit of
if
a
you didn't
banana
hear
thing.
that part, would you have thought that there was a banana note in the beer?
Probably not.
I don't think so.
It's I didn't like it as much as the last one. The last Belgian Gold Ale, the Duval. I don't know how to say these things.
Yeah.
So it's going lower than that one. I can't remember what I gave the other one. I'm giving this a 7.7.
Oh, it's still pretty high.
It's high, but it's it's just like I don't know. I
think
like the other one
last
better.
one you gave it like 8.9 or something.
Oh, I must have liked
it was
that
really
one.
high. Yeah, it was really
Yeah.
good.
Yeah.
I have to agree. I like this one. I like this one a little bit less than the beer from last week. Last week's beer was actually excellent.
And Patrick, how's your Barbados beer? What are you giving
The
it this
Banks beer, I'm going to give it the same 7.5. Nice, easy drinking beer.
Okay, so
Yeah.
for those who don't know, Patrick is in the Barbados. In the Barbados, I don't know if that's how I should say it, but you are now being stuck. Barbados is going into a lockdown.
Yeah, I'm the idiot that everyone's going to shame. That's
Shame.
Shame.
You're like Cersei
It's-
or whatever in Game of Thrones.
Yeah,
walking
like
down the
a-
street.
oh,
Please,
for
though,
sure.
Patrick, please keep
For
your
sure.
clothes on when you go down
Yes.
the street.
it's not my choice.
I cannot
when I'm being
unsee
shamed.
what I've seen. I don't want to see anything.
So tell us the whole story, Patrick. You gave us an update. Oh, and listen, lots of inquiring, people want to know what was camping in the jungle like. Patrick literally sent me something Saturday morning. I sent him a note. He sends back jungle camping. Talk to you later. What the hell is jungle camping?
Well, you know what? It literally was. I felt like I was in a tropical jungle, man. It was like the Tarzan vines everywhere, all these like limestone rock formations and all sorts of stuff, and all the tree frogs and everything going crazy.
You feel like you're like Arnold Schwarzenegger in Commando.
Yeah, but surprisingly, everyone was warning me that I was gonna get destroyed by mosquitoes, and actually the bugs were perfectly fine. It was.
Of course, Patrick. We're Canadian.
Mosquitoes
don't mess with us.
But in Barbados, these mosquitoes. Listen, the mosquitoes here are like half the size, and they're sneaky fucks. They, you do not see them. Like, in Canada, you can see the swarm coming at you. You can swat them. You know you're about to get bit. Suddenly, I'm like itching, and I'm like sitting there. You don't see any bugs. You don't see anything, and you got like 5 bites. And where the fuck did this shit come from, right? But they're stealthy. They are stealthy. They gotta be anyway. But yeah, it was a lot of fun.
Hopefully, you didn't get malaria or something.
No, it's actually it's not malaria here. They have it's a dengue fever or something.
Oh, the dengue fever.
That's the one. Yeah, that's the one that's being passed by mosquitoes.
That doesn't sound good, buddy.
I think.
Oh, you're right. There it is. Dengue fever is a mosquito-borne tropical disease.
Yeah.
Yeah.
But I don't think I got it. I feel pretty fine. At least I used a lot of alcohol to disinfect my body. If something including COVID survived in me after how much I've consumed, then that's one wicked freaking virus.
Yeah, this is actually bad. I hope you don't get it.
I'm fine, dude. I'm fine. Stop it. Now you're gonna get all the listeners
worried
concerned
about you. We're gonna all be worried about you.
I did not get.
What would we do? We'd have no talking charts. It would be a problem. It'd be a real problem.
Jesus.
We'll see if he can even get back into Canada, or once he
that's
gets
true.
back, he's gonna have to quarantine
especially with the
again
dengue fever. We're not.
Yeah,
Well, if he's got a fever, he can't get back into the
I'm
country,
seriously
period.
considering returning. Yeah.
Yeah. For those who don't know, our prime minister has changed the ball game on poor Patrick,
they're canceling all flights back not back, but to the Caribbean till April 30th, and so and making all sorts of quarantining rules. Man, everything seemed so fine in October when I was planning this. There was no COVID on the island. Everything was fine, and it's like I'm gonna go there and whatever, forget it. Anyway, I want to talk about something else. You're making me depressed.
Well,
you're in Barbados. How can you be depressed?
It's so wonderful. I want to fucking stay.
You don't know what the
lockdown.
weather was like here this week.
Oh God, it was
Oh,
cold.
Snowed in.
I think we're getting soft though, because it really wasn't that cold, but it sure felt cold.
I don't think it was that cold, but the sheer blizzard all day, snow blowing sideways. I was like, yep, not going outside today.
Right. So, Lena, everyone wants to know.
Yes.
Well, I like hearing talk. I don't know why we're talking to Patrick. Everyone just wants to hear you talk, anyways. Lena,
Yes.
how are the puppies?
They are doing great. They are now about just over a pound each. They've gotten much, much bigger. I have to hold them in 2 hands now. And this week they've all opened their eyes, so that's exciting. And we fall in love with them every morning.
That's awesome. Have you given any thought to Larry as a dog name?
Larry, it was a strong contender, but we only have
I'm
one
surprised.
male, so we got to be careful with that one.
Yeah.
I'm surprised that no one on Twitter gave a shit for that.
No. Well,
I thought someone was going to call you out on that. I really did.
Now you're getting all the Larrys. Like, Larrys are good guys. They know that it's kind of a joke. Listen, I named one of my kids Riley, and we joke about it, and we tell him he's a male. He's like a boy. And we tell him that, between the dogs, the girls, and the boys, we know more dog Rileys than anyone else. And the second is girls, and he's like the last. So I feel like...
like you're punishing your children. That's a good choice there,
yeah,
buddy.
I am. But
Somebody's going to write on Twitter and be like, hey, I got a new dog, and I named it Kevin.
that would be awesome. I would be honored if you named your dog Kevin for me.
All right.
I think it's funny when you could name a dog a people name. I think it's hilarious. Like, just because it's like your friend. Like, you put him in the side thing. My dad's got this dog. He's got so I have a Newfoundland. So it's this big Newfoundland. But my dad's got a fairly large what is it? A Labradoodle, or maybe, I don't know, something they mix in. It's this big thing. And I don't let our big Newfoundland sit in the front, but he lets his dog sit in the front. And literally, this dog sits upright beside me in the car when I'm driving around. I feel like I should talk to him. I should have a conversation. It's the strangest thing in the world. I end up like having like just a one-way conversation with him because it feels awkward if I don't.
I don't want to even say anything.
Anyways,
Kevin.
so listen, if someone names their dog Kevin, I'm all for it. I would be honored.
As long as you let him sit in the front seat.
Yeah, it's true. You have to have a conversation with them.
It's
So,
just
Lena,
too
what's the
bad.
plan? So you keep one of them and the 3 others are going to homes?
You know, basically our original plan was to keep just one since we already have Harley, and we're like, well, do we want to have 3 dogs or 4 dogs? Like, I don't know if we can do that. So we were saying, hey, we'll just keep one puppy, and then the rest will go to, the male dogs, the male parents' house, or, our parents want them, and our family members want them. So there's no shortage of people that would like these puppies. But now that we keep looking at it, we're like, oh, maybe we should keep 3.
Oh, my
my
God.
And,
No.
But,
Lena.
I keep reminding myself, like, how much does it cost every time you go to the vet?
But it's not even just that cost. Like, it's about moving them around. Once you have like 2-3 dogs, like putting them in the car or doing anything, or like they start running away. One goes to the right, the other goes to the left. Which one are you gonna chase?
I had 2
Yeah.
dogs, and I loved my 2 dogs dearly, but it was the worst
lot of work.
mistake I ever did.
Why was
it just they started barking like one's quiet, but then one gets the other one going, and it just ends up being that it's not double the work, it's actually exponential the work. It felt like, and you know what, like I don't want to dissuade you of it. Some people have 2 dogs, it's wonderful. I didn't have a good experience, and I've always said I won't have 2 dogs again. That's me. That's what makes a market. And not only that, if you told young Kevin that, I would have told you were insane. I know better. I'm having 2 dogs. All I'm saying is think hard about 3.
Yeah, 3 is probably not an
Yeah.
option. Like, we're just kind
Plus,
of
you're gonna
keeping
look like
ourselves
that weird couple with 3. Like it's hard. It's hard.
Yeah.
It's hard to look normal with 3. Now I've probably insulted everyone with 3 dogs, but
It's okay. But I mean, Harley, she is like enamored with Luke, so she's almost like just his dog now. She used to love me, and now she won't even give me kisses. So I'm gonna see what dog attaches to me, and then we'll just keep that one.
same thing happened to me with my wife when I had kids. She used to like me when I had kids.
Oh my!
Yeah.
We went there.
It's
Right?
okay. She doesn't listen. It's all right.
Oh, she
Lena, have you
wouldn't
had a
listen to
chance to listen to any new shows or do anything like that?
I've been actually watching Louder Milk.
Oh, so what do you think?
I think some parts are kind of depressing because of the premise of the show.
Yeah.
But I think it's dark humor. If you have dark sense of humor, I think you'd enjoy it. I've been enjoying it, and So
I finished it.
my-
I think it's the best show I've seen in years.
But I did get an email from one of the listeners saying, "Hey, I can't find Louder Milk in the United States. Where can I watch it?"
Really?
Yeah.
So
apparently
maybe
it's not
on
available
Amazon Prime?
No, not there. I guess it's.
Oh.
I've looked through online. It says it's available in the UK. It's available in Canada, but I don't think it's available in the US. I think
Oh,
you might
well,
have
that's
to
a
Was that-
shame.
purchase it on Apple. TV.
Why?
I have no idea.
know.
They don't like that dark sense of humor. I think it's the best show I've seen in ages. I can't tell you how much I enjoyed it. Like honestly, like it was
Is
like,
it just
Really
one
funny.
season?
it's so great. There's so many great things. It only gets better.
I just finished watching the episode with where his dad shows up.
Oh yeah.
Yeah,
Well,
that was really funny.
It is dark. So like there's no doubt about it. Like you'll wonder a little bit about me after you see it. But it's so well done. It's so witty. I just love it. Like literally it's probably the show I've been the most excited about in ages. I feel like I should go watch it again. That's how much I enjoyed it.
Wow, COVID's done a number on you. I think.
Well, no, I've always kind of liked these kind of things. And that guy, listen, The Office, how good a show was that?
Yeah.
Like not the show,
not the show, the
movie.
movie,
Sorry,
the
the movie. The Office show was good too. But this guy, what's his name? Ron Livingston.
Yeah.
So I have a question for you. I told my wife I was watching the show, and she's like, "Oh, Ron Livingston," and I was like, "What?" you guys like Ron Livingston, and he
It's
was
Burger from Sex and the City.
exactly. And I was like, what? And like, you guys like, I like him. He's a good-looking guy. He seems fine enough. It just doesn't seem like va-voom kind of guy.
No,
So
he's
is he a
not.
va-voom guy?
No, I never thought he
Oh,
was.
what? Can you say that again?
A va-voom, like a guy that they get excited about.
Not my cup of tea, but
I've knit.
to each their own.
He's probably too old for you. That's your problem.
No, old doesn't bother me. It's not the age.
Listen up, fellas. All the older gentlemen in the audience that thought that was a problem. Old doesn't bother her.
Age doesn't bother me. If anything, I get annoyed with younger guys.
Yeah.
So I like gentlemen that are a little bit older than I am.
Gentlemen. You like the guy, what's that guy in the commercial? I don't know. He's the world's most...
Oh.
What's that
Dos
guy?
Equis, the most interesting man in the world.
The most interesting man in the world. That's like Lena's dream date.
He is pretty fucking cool.
Do you know that guy was
He
like...
is.
You heard the story about him? He was like I think he was like a drunkard or something. He was like, let me just find it for him.
And he's now the highest grossing commercial actor.
Are you serious? This is a real
Yeah.
thing?
No, he's not the
Yeah.
highest grossing, you know.
For commercials, for commercial acting, he is. I saw some sort of stat. He was like one of the top guys.
Really?
We got to Google this. Hold on a
I
second.
was in survival mode, conserving every dollar. So instead of the comforts of a hotel before an audition, I crashed in my pickup. I was living like a hobo. Maybe I really was a hobo, I thought. I got dressed up outside my truck for the audition.
Wow.
The sports jacket that I wore on special occasions was folded in the back with a camping stove and other gear. Sitting on the open tailgate, I put on my pants, socks, and loafers. I thought back to my first days in Hollywood, hauling around industrial waste, earning a few extra dollars, blah, 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 blah. And so that's how he got the job. Like, he was just down and out.
Wow. Wow. Well, he's laughing now.
They said they want a Hemingway kind of guy. That's you. Was there any script to read? They
Yeah,
wanted
so
improv.
Jonathan Goldsmith is his name, right?
Yeah.
So
You can do any monologue you want, but you have to end with the line, and that's how I arm wrestled Fidel Castro. Oh, God, that's
Wow.
awesome. Yeah, it's a great story.
So he earned $8 million for that one part alone.
Really?
Yeah.
It's hilarious. That's Lena's dream date.
No.
I'm just kidding you.
All right.
Oh, look, he's got a picture with Barack Obama.
What?
Yeah. In Politico, I'm reading this article.
Wow. What a turnaround.
What a turnaround.
You just put a nice white shirt and a good suit on a guy, clean up the beard a little bit, and suddenly he's the most interesting man in the world. It
whoa,
gives
whoa.
me hope. It gives me hope. Maybe
Speaking
somehow
of
I can
beards,
clean up.
though, we gotta. This is an issue here. A lot of guys are sporting beards now. Like everybody has a beard, and then when they shave it, they look like a completely different person. Or you
It's like-
didn't
Does that
realize
bother
that
you?
they didn't have a jawline or a chin.
Oh, that's kind of like, do you watch Schitt's Creek?
No, I haven't in a
Oh,
long time. I
well,
only
I-
watched a few episodes.
It's pretty funny, but they have, she's the daughter is dating a guy, and he shaves his beard, and she basically dumps him because of it.
But I would imagine that's what it's like for men when they see, their significant, other females without their makeup on for the first time.
No, we love you all for who you are.
Oh my
but
God.
you make us feel-
I'm not even gonna say a thing. This is a topic I'm not gonna touch.
Yeah. I will tell you one thing that we did. This is how exciting it is in the Muir family. We were looking for something to do last weekend. Not much to do when it's kind of in pseudo lockdown. You're not supposed to get out, so we decided to drive up to the Schitt's Creek Motel
Oh, did you?
in Hockley Valley.
How is that?
We got out, we took a picture beside the Schitt's Creek Motel, and we drove back to the city.
It's
Pretty
an
fun, though.
adventure. It's a Muir family adventure.
And Patrick's bitching about being in Barbados by the side of his pool, and
Drinking 7 point whatever beer.
yeah.
No,
Well, anyways.
Banks is actually a 4.7. It's a light drinking beer.
We're gonna end early tonight.
All right.
I'm
Yeah,
gonna go.
we're-
Lena. I'm trying a pizza place north of Brooklyn. You ever tried it?
No.
Oh, it's good. You know what? It's our second time. We're trying it again. It's actually a great place. You should give it a whirl. Patrick, you tried it. Actually, there's one out your way, out west.
Oh, is there?
Yeah.
All right. I'm
When
gonna
you
have to do it
you
when I'm
grace
back.
us with your presence again, go try it.
Oh my God.
Anyways,
All
everyone,
right.
thanks for tuning
Yeah,
in. Have a great weekend, everybody, and we'll see you next week.
All right. Cheers, everyone.